Hello everyone, it is R Trades back here with another video. It is July 29th, 2025, and in this video I am going to go over my new and improved trading system. Going to tell you everything from top to bottom, including the platform I'm using, the indicators I'm using, the products I'm trading, anything and everything you want to know about a new trading system. All right guys, before we get into it, this is not financial advice. I am not a financial advisor. Trading securities, futures, any sort of derivatives products comes with a great amount of risk, including loss of your initial capital, if not more. Trade with extreme caution and only trade with funds you can afford to lose. All right, guys. Also, if you are following me on X, please make sure to follow and head over to YouTube. Give me a subscribe on YouTube for more content like this, guys. I'm a full-time practicing attorney and an amateur day trader. I recently have moved over from trading prop firms to trading my live brokerage account, which is why you'll find me on the micro ES futures. I trade on a US-based brokerage called TradeStation. At the time that I signed up for my account, I got an excellent promotional deal, which you're not going to find anymore anywhere. I got lifetime micro futures at a quarter or 25 cents per side, 50 cents per round trip, which is just incredible. So I haven't heard of any brokerage that offers a lower commission than that, and even TradeStation doesn't offer that anymore. So that's why I trade on this account. I'm kind of grandfathered in. Okay, first thing that I want to talk about the system is the product that I'm trading. So I trade one product and one product alone, and that is the micro ES futures, guys. So the S&P 500 stock exchange is one of the premier stock indices in the world. It's one of the U.S. big three: the Dow Jones, the Nasdaq, and the S&P 500. And these are futures on the S&P 500 contract, and this is on TradingView. So you can see the platform that I'm using is TradingView. On the right side, you'll notice I only have one item on my watch list, and that is the micro ES futures. It costs me about right now anywhere from $2,200 to $2,344 for me to trade a single contract. It is $5 a point, $1.25 a tick. One thing that I did want to mention, and this is kind of a part of my system, is I have voluntarily called my broker and I have disabled the day trading margin. So normally from 8:30 to 3 p.m. Central Standard Time, or 9:30 to 4:30 when the regular stock market is open, normally you can trade at 1/10 the amount of margin, sort of for my own risk management and to bring down the cost basically that I'm risking. I voluntarily disabled that, so I have to trade with the overnight margin. So basically I trade one contract until I'm over about 4,400, 4,600 in the account, and then I can trade two. All right, so with that being said, that is the watch list that you'll see on the right. I'm trading the micro ES futures. First thing you'll notice is I am on TradingView. So if you are using another NinjaTrader, Trade of 8, whatever you're using, you want to use this system, you can, but you're going to have to figure out how to do that on your own trading platform. Okay, so first thing I want to talk about are the time frames here. On the top left, you'll notice I have the 5-minute, the 15-minute, and the 1-hour chart. That is all I trade with, although I can go in and, for example, manually change the time to look at the daily chart, for example. All right, but generally speaking, what I do is I will take entries on the 5-minute. The 5-minute is my working chart. So the 5-minute is the working horse chart. The 15-minute is really for trend confirmation. The 1-hour is for kind of larger trends. And so that's what I do there, guys, on the time frames. Next thing I want to talk about are the chart scheme and the colors. I use basic red and green candlesticks. All right, you can use bars. There are other systems out there, but for me, I use red and green. Open, high, low, close candlesticks. One candle is 5 minutes. The 5-minute is my working chart. Again, the 5-minute is my working chart. Whenever you are looking at the background of this chart, you'll notice that there's a dark side and there's a light side. The darker shaded gray or black are the regular trading hours when the U.S. stock market is open, and the lighter shaded blue, or kind of aqua blue, darker blue, navy blue, is when the stock market is closed. So the majority of the chart is going to be that darker blue. All right. Now let's talk about the indicators that I have on the chart. Many of you are already going to be familiar with these. On the top of the chart, I have the RSI, or the Relative Strength Index, on a 70 overbought, 30 close, the standard kind of default out-of-the-box settings. I've put that on the top of my chart. On the bottom of the chart, it's kind of an overbought, oversold indicator. On the bottom of the chart is going to be the whole key to the system. That is the average true range. Okay, so what I'm going to do real fast is take away my camera so you can see the average true range. The average true range down here is measured in points. All right, so it's measured in MES points, where 1 point is 4 ticks, 2 points is 8 ticks, 3 points are 12 ticks. All right, that can be a little bit confusing at times. On the right side, you'll see it's a rolling 14 period moving average. I forgot what the R stands for, but it's a rolling moving average, 14 period, out of the box settings. And basically it tells you the average range of the candle. So for example, right now you would expect the average candle to be 1.39 points. And if we look at our last candle, it was 1.5. The last one was about the same. Generally speaking, guys, what you're going to notice is that your average true range is going to be significantly higher during your regular trading hour session. It's going to be significantly lower during your overnight session, picking up during the pre-market. You're generally going to see your largest volatility or range in the morning session. All right, the first 3 hours of regular stock market trading. Although that can sometimes, if you have like FOMC, you have a news event, you might get larger throughout. If you have some cataclysmic news in the overnight session, you might see a larger than average range during the overnight session. Generally speaking, though, here in the summer, we've seen ranges that go down to about 0.8 points up to 1.6 points during the overnight session. So really, you can see very small candles. The chart here on the right can be deceptive. One of the reasons that it can be deceptive is because it changes the scaling based on what the visible data in the range is. So it can be deceptive. All right. So how do I take my entries? How do I take my exits? What else is on the screen here? There are two moving averages on the screen, and that is the exponential moving average 9, which I have shaded in blue, and the exponential moving average yellow is the 21 period exponential moving average. So the fast moving average is the blue, the 9 period EMA. The slower moving average is the yellow, and I use the number 2 width. My entry rules are as follows. So I always enter in on a limit order. Okay. One other thing I wanted to mention before I get into my entry and exit rules is that I always I have my profit and loss measured in. I have my profit and loss measured in ticks. I do not have it measured in dollars. Okay. And I have done that on purpose, and I cannot get my right click to work. I'm sorry about that. So I have changed my profit and loss to be measured in ticks. And I can't get the screen to be very responsive right now. All right. So if we open up the settings, which I don't know if it's going to want to open up or not, I have changed it to read in ticks instead of dollars. Here's the basic entry signal, entry pattern, entry rules. I always enter in on a limit order. So here we can see on the trading, notice that I've set the profit and loss to ticks and the brackets and profit and loss to ticks as well, rather than dollars. This is to kind of cut down on some of the noise, and it makes things easier to calculate. So my entry rule is that I only enter in long trades that are at or above the 21 period or the slower moving average. And I only enter into shorts where the price is at or below the 21 period or the slower moving average. And I only enter in on limit orders. When I'm trading here on desktop, I can use the ladder here on the right. So for example, this would be a 5-minute entry. Now, what I do is I go down to the average true range to determine my take profit and my stop loss. So right now the average true range is 1.32 points. Now obviously the points don't translate directly into ticks. So what I do is I round up. So for example, if we take 1.32 times 4, that's 5.28 ticks. I would round that up to 6 ticks. Okay. And unfortunately, I'm not getting this to load properly for me, probably because I'm making a video. I use one ATR or one average true range as my stop loss, rounded up to the next tick. So I always round up to the next tick. And then I use a take profit that is exactly twice the stop loss. So I use the 1 ATR as the stop loss, and I use twice the stop loss as the take profit every time. So the advantage to this system is that I've taken a lot of the discretion out of the picture. I've taken a lot of the guessing out of the picture, and made it a lot more mechanical, basically. All right. So let's see if we can take a trade, if it's going to let me. So rule number 1 is I only enter in on limit orders. Now, I'm not saying that I always enter in right at the EMA 21. So in other words, there may be some confusion as to, do my rules only allow me to enter in at the exponential moving average 21 period? The answer is no. That is, I must enter in a long at or above on a limit, at or above the 21 period exponential moving average, which is the yellow line on the chart, or I must enter a short at or below the 21 period moving average for a long. I also, so let's go into why I use this system. Number 1, it takes a lot of the discretion out. Number 2, stops based on volatility, take profits based on volatility as well. So I'm adapting the take profit and the stop loss based on the volatility or the average true range that we've seen over a 5-minute period. Number 3, it takes away a lot of the discretion, meaning a lot of the mistakes that I would normally make, I would not make with this system as long as I stick to it, because it is a mostly mechanical system. All right, I have discretion as to where I want to put the limit order. That's pretty much it. Other than that, I always round up. I measure my profit and loss in ticks. So you'll notice that if I drag an order down, it doesn't want to do it. All right, let's see if we get filled on this trade and use this as a video example. All right, so the price is coming back down to the exponential moving average. All right, so what percentage of the time do I need to win in order to break even, and what percentage of the time what I need to win to make profit. So it depends a little bit on the entry and exit, or how far the stop loss is and how far the take profit is. In general, because it's a 2-to-1 risk to reward system, I have to profit at least with commissions 34% of the time to break even. So I can lose every 2 out of 3 trades and break even. Anything 40% or above, and I have a positive expectancy. All right, guys. So what is expectancy? Expectancy, or expected value, is your long-term profit expectation. When you use a mechanical system like this, it's very easy to calculate what percentage of the time you need to win, and what percentage to break even, what percentage of the time you need to win in order to show a profit. And then this can all be put on a curve. So the advantage to a system like this that is not discretionary is I know exactly. So let's use this trade as an example. We have a 1.32 average true range for every 5-minute candle. So 1.32 points, you have to multiply this by 4 to get ticks. That's 5.28 ticks. I round up to 6 ticks. All right. 6 ticks is going to be the stop loss. Okay. Therefore, 12 ticks is going to be the take profit. In order to have a positive expected value on this trade, I need to win about 34% of the time or more. And that this trade will have a long-term positive expectancy. I've followed all my rules here, in that I've entered a long at or above the 21-period exponential moving average, and I fully expect that most of my trades are going to lose. Again, I really only need to win less than half in order to break even or show a profit. So this is my system, guys. I'm incorporating the RSI. The ATR, my entry is at or above the 21-period exponential moving average on a limit order. You might be wondering, why am I so strict about using a limit order? This is more or less a scalping system, meaning it's a short-term, intraday, not expecting for these trades to last very long. I'm expecting to win or lose pretty quickly on these trades. And so every tick matters. And when you enter in on a market order, over time, you lower your expectancy because you have to factor in a lower accuracy and you have to factor in slippage. So generally speaking, that's because it has a higher expected value over time. That's why I enter in only on limit orders. And that is the system, guys, from A to Z. If you have any questions, feel free to leave a comment in the comment section below. I want to thank you for joining me. This has been an introduction into my trading system. I'm hoping to make a video on expected value coming up soon, talking about what expected value in trading is, using Grok for that, the AI. Also want to talk about why entering in on limit orders for your scalping can yield a higher expectancy. Also want to talk about why some of these tools, the AI recommended these. Those are some of the things I want to talk about. So this is my new trading system. This has been Our Trades. Want to make sure that you follow, like, subscribe, comment, interact with the video. I appreciate it. Thank you.